And there you have it. The markets are officially closed on this Wednesday, March 4th. Welcome, investors and traders. I'm AJ Monte from StickyTrades. And before we get started, I want to do a quick shout out to those of you who are watching on X. You might want to come on over to the YouTube side for a much better experience because you'll be able to put in ticker symbols and ask questions over there. We'll pick those up for sure. And last week, we had discussed a few stocks, and some of them are doing very, very well just from the broadcast that we did last Wednesday. And before we get into the charts, I want to bring on Nod from our Nod Live news feed. Nod supplies the dynamic news relative to the markets and the financial industry. And I want to first commend Nod for the great job that he's doing because his news feed is beating Bloomberg to the punch. So he's putting out the headlines to our members quicker than any subscription that you would have over there at Bloomberg. So, Nod, why don't you start right at the top of the list, bring on some of the news that you're looking at, and then we could go into the rest of the market. Go right ahead.
Thank you so much, AJ, and thank you, everybody, for being here. We are so grateful for you giving us some of your time. We know life is busy, and let's get after it. Listen, it was a pretty volatile week, and we saw a little bit of calm today with each major index closing with a slight gain as traders are starting to digest modesty in the Iranian world. But oil is not. Oil is not looking beyond the conflict. And for instance, AJ, the insurance cost of hauling more than 2 million barrels of oil jumped more than to $29 million. So that's about $14.50 per barrel, or 20% of the value. It's something to think about. That's going to get passed along to the consumer. Also, U.S. money fund assets surged to $8.3 trillion, really saying that people are landlocked and afraid to deploy new capital. But what I want to do here, AJ, is we talked about market whipsaw here. So I've got a chart up here. While U.S. equities are generally resilient to macro conflicts, AJ, that does not mean there won't be some volatility, as we saw on Monday and Tuesday. So AJ, knowing that the retail investor is a little bit landlocked and scared and has their hand in their pockets, what do you think about, and let's revisit the Qs, diamonds, IWM, and VIX, please.
Well, I have a chart up here of the diamonds. We'll start off there because for those again who are following on the weekly market report, I put out these targets each and every week, and we've been hitting targets in a very efficient way. In fact, over time, we have over 80% of our targets. 82.2% is the number that keeps coming up. Over 60 trading days, 82.2% of our targets that we set hit. So you could obviously see the advantage of being on this live broadcast because, like what we did last Wednesday, I gave everyone a clue to the downside is where I was going to go on my Thursday report. So the folks that were able to tune in on the Wednesday afternoon were able to get in on Thursday into the market to make their adjustments. And then the people that picked up the weekly market report on Thursday afternoon still had the rest of Thursday and into Friday, which is when all the action was taking place. So you could see here that my target on the downside, which is this diagonal line here, I said we would most likely pull back from resistance. And that resistance line was initiated right here in the beginning of February. So we went right up to that resistance, pivoted lower, hit my downside target like a champ, as we always say. And now what you see is a pivot to the upside. So we have a higher low, higher high. So here's my, I guess you could say my pre-report to the report is that I think we still have a little bit of upside to go on diamonds, but I'm not getting extremely bullish. Because if you look at this blue line right here, that's the 20-period moving average. And so now that we're below the 20-period moving average, that 20-period moving average is going to start being drawn down, and that's going to act as resistance. So I think we're going to see a little bit of a bump to the moving average, and I think we're going right back down. We'll have to get that final down count or the down target on Thursday, so stay tuned for that. IWM, again, all of my targets have hit, every single one of them, including the VIX. We'll get to that in a moment as well. You could see that yesterday we went right down to that down target of 255.51 and bounced perfectly off of this roll reversal. Now, for those who are joining us for the first time, let me tell you, the easiest line that you could draw on your chart is a horizontal line. I mean, any trading platform or charting platform that you have gives you the ability to draw a horizontal line. So what I do is I look to the left for an area of resistance, which is right there, and I draw right through in a horizontal way to find out where support is going to be, because the whole premise behind role reversal is that once resistance is broken, like it was here on this bullish engulfing candle, it generally pulls back to the breakout point
Right.
and then pivots. So now you've got the support level being held. So yesterday we hit that again, held as support again, and now we got the pivot. You see, so IWM looks more bullish in the short term than bearish. But what I'm not crazy about is if you look at the volume bar today, we came in about 25, almost 30% shy of yesterday's volume. So the volume is decreasing on the way up. And so, with all that said, I think we're going to be stuck in this trading range for a little while as IWM oscillates in that channel. Now, looking at Qs, because this one's tech heavy, obviously, you see that again, we hit that downside target perfectly. That downside target was 595.82. Hit that again. Look at that. Yesterday hits perfectly. That long shadow, which is the vertical line under there, that long shadow is more or less a tell, which gives us information that the buyers are coming in. And our VIPs benefited the most yesterday because when I was doing the VIP webinar with them, I have a VIP chat where all the VIPs are plugged in. And I said, 15 minutes after we hit the exact bottom, I said, I wouldn't be surprised if we see a rally from here. And I don't know if we have any VIPs in the chat there, but shout out if you made some money on that one. I'm not making income claims, by the way, folks. This is what everyone else has been doing based on the technical signals that we're pulling on the charts. And it's just been textbook signals trading. So here we have another one where the Qs are going to hit resistance up here right around, what is that? That's going to be the right around 615 to 617. And so we might go a little bit higher tomorrow. And then if we do go higher and we see a lower volume day, then my forecast on Thursday for the Qs is most likely going to be a pullback from that resistance point. So we'll save the SPY and the VIX for a conversation a little bit here, not because I know you have some things you want to talk about before we get to SPY. Go ahead.
Yeah, well, I mean, I left that out on purpose because, it's been around for a long time, and Monday was only the 231st time that it saw a 1% gain, 1% loss, and then to close with a large gain. So the real theme here, AJ, is volatility. And if you could talk about the major indices, but really the two components we get the most inquiries about are Nvidia and Apple. I know those tend to be crowded trades, but as those names go, so does that major index. So with regards to the S&P, what do you think about that, the overall S&P? And then if you could talk about Nvidia and Apple, I'd appreciate it.
Yeah, well, let me start with Nvidia because we have a position this one, and we did a rollout this morning. I'm not going to get too far into the option discussion. However, anyone in the audience that wants to talk options with us, come on over. We've got a 2-week free trial where you could plug into all of our webinars, ask questions with me live on these webinars. You could really connect and learn what we're doing in the option markets. But we took in some cash today, rolling out our 170 puts that we were short in Nvidia. Now, Nvidia went up on a very slight, I would say maybe slight increase in volume, almost equal to yesterday. But we did get the pivot after we hit the downside target on Nvidia. So what I'm saying here is that while you viewers are able to look at my targets each and every week as we do the midweek and the weekly market report through YouTube, our members are getting the benefits of all those price targets on individual stocks. And you can see here, just looking at Nvidia, just going back to the end of last year, 100%
Right.
of these targets, 100%, folks, 100% of the targets have hit on Nvidia. Now, that's never a guarantee that the next target is a guarantee to hit. But I think we're going to go up just a little bit more on Nvidia because if you look down below right here, I'll zoom in. You see the CCI, which is the commodity channel index, that crossed today with a buy signal. When the blue line crosses above the green, which is the minus 100, that is one of the more reliable signals. So whether you become a member of ours or not, I would strongly suggest you add the CCI onto your charts and learn how to read it, because it's my favorite indicator. And like I said, it's very, very reliable. Now, when we look at Apple, which is ticker symbol AAPL, you can see here again, look at the target hits, 100%. I'll highlight these for you. 100% of the targets that we've set since the end of last year have hit on Apple, both on the downside and on the upside. Every single one of these that are circled with targets that were hit. Now, the difference between Apple here and Nvidia is that Apple's down below that 20-period moving average, but today we have a bearish engulfing candle. Just the name of that candle will lead you to the direction that that one could go. So I'm not quite sure Apple's going to be in lockstep with the general markets, but I can say that there's more selling pressure today on Apple than buying pressure. So obviously that's going to affect the S&P, which I can go to now through SPY. This is the one we trade. And if you notice the 20-period moving average, can you see what's happening here, folks? Just use your mind's eye to plot this out. We're forming what looks to be like a rounding top. I mentioned this on Monday with our option traders. A rounding top is opposite of a rounding bottom or a salsa bottom. A rounding top is much more bearish than bullish. But if you take a look at the moving averages on the SPX, right? The SPY is the ETF for the SPX. You can see that blue line, which is the 20-period moving average, is now below the green line, which is the 50. And so if the price action pivots lower and starts dropping below the red line, I know we got a lot of colors here, and if there's anyone that's colorblind, my apologies, because you can't see the red, but I'll point that to you right there. They for those who are colorblind, what I would suggest is make the red lines and the green lines a different width, so that you can identify them by the width, not necessarily the color. That might help you there. But if we start dropping back down below the 100-period moving average, then the 20 is now going to cross below the 100, and that's going to spark some, I would say it would trigger some algorithms to start selling in the market. So you got to be really careful with that. And with all that said, let me just go to the VIX here, because the VIX hit my upside target here and came within pennies of that green line, which is my secondary target up there at 28.57. Now, I think we're very, very close. I can almost guarantee you right now, my forecast on Thursday is going to be that I'm going to go upside target on the VIX, which means I'm expecting volatility to come in here, especially with everything that's going on in Iran and the conflict that we're currently involved in here. But I think we're going to start moving up to that level on the VIX, right around 28, 29. So what that means is that because the VIX is inversely related to the S&P, anyone who's long the S&P or anyone who's long stocks, tech stocks, especially in the Qs, I would say learn how to collar your position with options, which locks in the prices so that you're not subjecting yourself to unhealthy risk. Let's put it that way. I think there's many different strategies that you can incorporate when the VIX is starting to go up. It's just a really, really exciting market here, folks. And, I've been doing this for, let me say, since 1982. So we're 44 years under my belt as of this coming August. 44 years, over 4 decades. Some of you who are watching this weren't even born yet when I started, putting charts out there to the world. But these are charts. These candle charts have been around for hundreds of years. They were developed by the Japanese rice traders. And if they've survived this long, then there's something to be said there about their level of accuracy. So we teach you how to do that over here at StickyTrades, how to read the different signals combined with the oscillators down below, how to read the volume, and how to put that all together for you. So again, we have members in the room right now in the chat, and I want to welcome all of you as well. All right, Nod. So we had some ticker symbols that you want to look at, unless you had some discussion about silver, because I know we got to talk about silver.
Well, yeah, I was going to talk about, I know what you were doing 40 years ago, and that was playing with gold and silver. I mean, so last Friday, COMEX was able to make delivery, but that was on fumes. I mean, AJ, Shanghai went down to under 10 million ounces, which is down 90% since 2021. And COMEX is down to 88.2 million, which is just a staggering low level. So with where we are now and with the volatility that we've seen, can you give everybody kind of a refresh of where you are with regards to gold and silver?
All right, now I'm a mega bull when it comes to silver. I trade gold mainly on the long side, but I'm not getting in and out of gold. In other words, I'm not parlaying my gold position. I am parlaying my silver position. And so as a former member of COMEX for 10 years, I also served, many of you know this already, but I served as the chairman for the option floor trading committee. So I know the shenanigans that happens from the inside out.
Putting it
And
nicely.
as of last Friday, which was the first delivery notice day for COMEX, your Bank of America is looking to take on a pretty large delivery. And what's happening is there's two sides of the COMEX vault. There are the bars that are registered, ready to go out the door, and then there's silver that's stored by COMEX in the vaults that are called eligible ounces of silver. The eligible doesn't go anywhere because it's owned by someone else. Now, those eligible ounces could at any time convert to registered if the owners of the silver decide to sell it. But as of now, the eligible ounces are not for sale, and the registered ounces are dropping in the inventory. So I think you had the number. It was like 88. Was it 88 million ounces?
Yeah, COMEX is down to 88.2 registered deliverable ounces, which is down an incredible amount.
Right. So if you're watching any kind of YouTube broadcast and they're telling you, oh, there's enough silver in the vaults for COMEX to deliver, then they're not giving you the true picture. It's the registered ounces that you have to pay attention to. So I'm going to do a quick shout out to Bix Weir, who has a program on YouTube called Road to Ruta. And he does a great job deciphering and explaining how the delivery notices work on COMEX, because he'll take the reports that are very difficult to read for the average individual, and he'll translate that for you. Now, I can't tell you what's going to come out of this man's mouth, because he says all kinds of stuff, and he makes accusations. I mean, I'm surprised he hasn't been sued off the air already.
I don't think he cares.
For defamation. I mean, he comes right out and names names and calls them criminals and all that. We don't do that because we want to play a little bit safe, but we do stick our necks out once in a while. But yeah, Road to Ruta with Bix Weir, and follow him, especially as we get closer and closer to the expiration dates on COMEX, because he'll show you what's happening in the vaults and all the lies that are being told by COMEX and a lot of the institutions like JP Morgan. I will leave it at that. But yeah, no, I'm very bullish on silver today. Look at that. This is the futures contract right here, and that is an inverted hammer. That is extremely bullish, by the way, and it's coupled up more or less with a bullish harami. Let me show you something here. Here's a bullish harami followed by another bullish harami. You see that? That's when you have a small body candle falling within the body of the previous red candle. Look what happened last time we had those bullish haramis. Here's another bullish harami, actually. So there's a bullish harami right there. So I am expecting silver futures to rally, but I'm very bullish on the miners. I think not you and I named a whole bunch of miners. I'll just rattle off some.
AGQ was requested.
Yeah, AGQ we looked at last week. AGQ is one of them. AG, First Majestic, Pan American Silver, PAAS, Freeport McMoran, FCX. What are some of the other ones? You got Barrick. Right, they're a mining company. But look at this one. This is good for the option trades because this is a silver ultra leveraged ETF. I wouldn't get in on this one as a outright equity trade, but the options look very attractive here. This one looks like it's ready to go. I mean, I think this one could rally all the way up to 195, and that's like $45, $46 from where it is right now. It doesn't look like a big move there, but that one's on the launch pad ready to go. And again, the mining companies like LAC, I will tell everyone I'm loaded up on this one as well as many of our members. I have a price target on LAC up there at 545. Now it's trading right around 480. So percentage wise, And for those that don't have a whole lot of money in their account, I mean, that's a very inexpensive stock trading around $5. Once that gets over $5, it's going to make another pop like it did back here. It rallied about 10% just in a couple of days after it broke out over 5.
And that's because the margin requirement changes, correct?
Yeah, and it flips back and forth. So that one's gonna oscillate above and below the $5 mark. But once that starts getting over the high here that we saw from last week, which is right around 537, I think that thing's going to take off. I think that's got the potential to go up all the way, possibly the $7, maybe $8. So you could do the math and see what kind of percentage of gain you have there as a potential for that stock alone. We're not even talking about the options. That's just in the stock itself. Yeah, so very exciting market indeed. Oh, one other thing, Nod, I want to point this out. You know, the main theme, obviously, here over the past weeks has been silver and what's happening with the manipulation. But you have to understand, now that we are in this war with Iran, I don't think it's going to be a long war. We don't have the Bush family behind this drive. I think it's going to end fairly quickly. However, with every Tomahawk missile, with every cruise missile, with every bit of weaponry that they're launching over there in Tehran, those missiles include silver with them. So they're literally blowing up the supply right now. And that's one of the reasons why recently, as late as last quarter of 2025, the U.S. Department of the Interior put silver on the critical metals list, critical minerals list. And this is why we need silver, not just for defense, but for a lot of other things. So right now, not only do we have a shortage in the supply, but they're blowing it up. And that's not going to be recovered anytime soon, if at all. It's just get blown up into many pieces of metal. So that is gobbling up a lot of the inventory that the Department of War is purchasing right now from the miners, and we're going to have to see how that plays out over time. But yeah, I'm still very bullish, mega bullish on silver especially. Absolutely.
Well, AJ, I'll tell you what is getting blown up. It's our chat request. So every Wednesday at 6 p.m. Eastern, all of our members get to come in here. AJ field and forecasts 50+ live tickers. He draws out some technicals for you and gives you his take on it. Again, it's not saying he would trade it, but he's letting you know where he thinks it's going to go. AJ, I have over 30 tickers in here. So do you want to let's skip some of the content and get right after it?
Well, I can't do all 30 in 8 minutes.
No. Wait, we'll chop it down.
Yeah, but we're going to be doing this, carrying this broadcast over into a webinar from 6 to 7. So if you're interested, you still have time to enroll in the free program for 2 weeks, and you can plug into that. But we'll go over 50 stocks. And by the way, Nod, we have 44% of the stocks that we analyzed last week in 5 trading days. 44% of them have already hit the targets. It's way above average. And oh, by the way, talking about way above average, we just hit #1 spot on X, outdoing the Alex Jones network by a slim margin. Congratulations, all of our viewers, for doing that. You did it. We can obviously do that. Congratulations and thank you. Thank you so much.
Let's reward our viewers here. Nick is asking about SIVR, if you would, please, AJ.
SIVR. Okay, here's what we're going to do. Nod has no idea what I'm doing here, and we didn't even have a chance to organize this.
Oh, dear.
I'm going to put a target out on this stock, okay? And if this stock hits, because it's the first one, if it hits, the person who submitted that ticker symbol is going to get a StickyTrade mug or a tumbler. How about that? So here we go. Who's the person that did this, Nod?
This is Nick F.
Nick, okay. I don't know if you're a member. If not, then at least let us know where you're coming from, where your mailing address is, so we could send you that mug or tumbler. All right, so I'm putting in 87.41. 87.41. So you got better than, what is that? It's going to be better than $7 to the upside. So it's about 8.5% to the upside. And the reason I'm coming in at that level is because that's just shy of that resistance. You see that? And so the CCI down below is starting to pivot. So I put a target right there of 87.41. I hope that target's hit so we could get a tumbler out to Nick and congratulate him for participating here. You know what I'll do? Next week, we'll do the same thing. The first ticker symbol that comes out. All right, I got to calm down a little bit. But the first ticker symbol that comes our way on the live broadcast, if those targets hit on that first forecast, you're going to get something from our swag store. How about that? Okay, next one. What do you got?
Let's go. Eric Johnson's asking about Meta, please. He says the CCI is up and stochastic's up, and there's a pivot. Is there room to run?
Yeah, see, here's another one. 100% of our targets on Meta have hit. 100%. See, back here, that downside hit, upside hit, downside hit, upside hit. You see how accurate that is? This is the evidence. It might sound like we're boasting about our accuracy, but all credit goes to the charts. All you have to do is learn how to read them. Now, we've got a long stretch of green here, and Meta is going up to this resistance area. I think Meta's got a little bit more upside to go, but then I think it's going to come right back down to the moving average. So that's a two-part forecast, by the way, mainly because that resistance is so close, and the volume is dropping on the way up after all that green. You see that green that's known as a stale green light? We have 7 green days in a row, which means we're long overdue for a red. So think about this. For any traders out there, you see all that evidence of, the buyers getting tired. What are you going to do? You're going to protect your profits, possibly take profits on half the position, protect the rest with a stop. And definitely the charts are telling you, hey, you might want to wait for a buy signal instead of a sell signal before buying that one. So I think it's got upside potential there to 676.13. I don't put the pennies in there. I just dropped the line. 676.13 on the way up, and then right back down to 656.21. 656.21, as this as well is in a very well-defined trading range right there. And until it breaks out of that channel, it's going to be stuck in that channel. So let's go. We got time for a couple more, Nod. Let's go.
Yeah, we do. So Stan would love you to cover CoreWeave, please. CRWV. It's a name we've talked about a lot. It's been pretty volatile, and it's hit some targets.
Yeah, this one again, look at this. I'm going back all the way to the beginning when this one came out in 2025, and I'm just scanning here. And once again, I'm looking 100. Oh, no, I'm so sorry. One target out of 9 targets has still open. This one is still open on the upside at 127.27. So that's about a 90% hit rate on that one. And so I'm still going to go up on this one as well because it's got a major gap. Now, it doesn't look like much on here, folks, but I'm putting an 85.66 target. 85.66. So you got 6 points and $6 and what is that, 16 cents to the upside. I think there's a good chance that will hit. But as swing traders, you got to know that if you get into a stock, it goes your way. You can't just sit there and twiddle your thumbs and hope that you're going to make $1 million from your $2,000 account. You got to go out there and take your profits because, number one, you can't lose money taking profits, but you certainly don't want to turn a winner into what? You members out there know what I'm going to say. Turn the winners into losers. That's pathetic, actually, when you do that. But that's just lack of action. You got to stay on top of the market, follow the charts, and do what the charts are telling you to do. All right, so upside target, again, that's 85.66. Now, we're going to do a lot more. We're going to do 50 stocks like in this fashion from 6 to 7, and the majority of those targets will hit. I can guarantee you that. All right, next one.
All right, so ECM would love Microsoft, please. That has been beaten up with the software sector, please.
Now, I still have an upside target on this one, but it's getting a little tight. This will zigzag its way up. I have an upside target that's going to take a little while, but I have that up at 429. Now, why am I going to continue with that upside target up there at 429? Because for 2 days in a row now, the candle is closed over the 20-period moving average. All right, so that's bullish. And secondly, you've got a massive gap above the market that's going to act as a price magnet to draw that price up. Now, that'll take a while to fill. But right now, the draw is still to the upside. So for those who are long Microsoft, have calls or short puts or long the stock, whatever it may be, the upside target of 429 is something you want to keep in your sights. Now, Nod, we didn't run out of ticker symbols. I know you still got 27 left, but we ran out of time, and we're at the bottom of the hour. And again, I think we hit a record on X. We're now blowing away Alex Jones. Hope he's listening too, because he should have some financial folks talking about the market instead of politics all the time. People are getting tired of politics, right? Anyway, folks, thank you so much for joining us. We had a great time. I hope you did too. And make sure, again, for those on X, come on over to YouTube, hit the subscribe button, hit the notification bell, boom, add some comments, and we'll talk to you next Wednesday. Thanks again. Thanks, Nod. Okay.